Hi all. Today we're going to talk about recession, and don't worry, it's not going to be one of those videos when I predict the recession is coming next month and we all going to be deeply in red. No, nobody knows when the recession is coming, and don't believe all of these people who are saying that after the next job report or after Fed cuts its rates, we're going into recession. Nobody knows when it's going to be. But recession is an amazing time for investment. In fact, two of the best periods I had in my investment career were 2008-2009, the housing bubble, and 2020-2021, the COVID recession. These are times where you can easily make triple-digit returns if you're just prepared for everything that is about to happen. So in this video, we're going to talk about how to prepare your portfolio and how to prepare yourself for this, well, great opportunity that can be recession. Before we begin, please support this channel by pressing the like button, leaving a comment, and subscribing to our channel. The first thing that you need to know is that in recession, cash is a king. Would you like to buy, for example, Nvidia for 50 bucks or Palantir for 15 bucks? Or maybe Microsoft stock for half the price? All of these opportunities can very well present themselves if you just wait patiently enough and if you are ready with the cash on hand. So if you have some kind of a cash reserve, great, sit on it for now. Just wait patiently for a few more months until all this madness in the market either comes down or comes crashing down. If you have some positions which are already there, so you had some kind of a target price and now you hit this target price, think about starting selling this because you will need cash if the recession hits. Now, obviously, I don't know what is going on with your portfolio and I don't know what is your kind of investment style. But if you have a good strategy, for example, if your strategy is DCA, dollar cost averaging, which is pretty common, I think. It's when you take a sum of money and you invest the same sum of money in the same stock or ETF or number of ETFs every single month. If you have a strategy like this, great. Keep on investing with the strategy even if the market falls down. This is the best time to invest in undervalued securities, but I have to suggest to you something interesting. So recently I read an article which is called Building a Better Mousetrap, Enhanced Dollar Cost Averaging. And in this article, there are a bunch of ways to kind of accelerate dollar cost averaging. So how to make your returns even bigger and your chances of success even greater. One of the things, for example, which the authors of the article suggest there is that you keep investing the same sum of money, but if your portfolio has a down month, so for example, the whole month, your portfolio goes down a couple of percent. The next month, you invest a little bit more. So for example, you invest $1,000 each month and your portfolio just goes up every month. On the month where your portfolio is in the red, you invest $1,200 or some amount like that. This is a way to kind of supercharge your returns, and in this way your returns from dollar cost averaging are even more. We are going to make a separate video about all of the strategies of how to enhance your dollar cost averaging returns, and it's going to be published after this video. So if this topic interests you, subscribe to this channel and you won't miss our next video. The third thing which you need to do is to take a good look at your portfolio and take a look at the stocks which you have there. If you have some defensive stocks, and when I'm saying defensive stocks, I'm not talking about like defensive companies which doing government orders. I'm talking about stocks in sectors like utility, consumer staples, and healthcare. These are stocks which are not really going down a lot during recessions. So for utilities, we can talk about, for example, energy stocks, and shameless plug, we have a video on energy stocks, which will be somewhere here. For healthcare, we're talking about companies like, for example, United Health or Johnson & Johnson. I'm not talking about biotechs, big healthcare companies. And for consumer staples, we're talking about companies like, for example, Procter & Gamble and Coca-Cola. Yes, I know these are not companies which will make you 100% per year, but these are companies that almost don't fall during recession. So if you have stocks like this, you're good. Your portfolio would not be very much affected if the market goes down. By the way, one of the biggest pitfalls which awaits you if the recession hits is the growth stocks. Growth stocks, usually they are smaller companies with small market capitalization. These are companies that don't earn a lot of money, if at all. They have a lot of debt and they need to raise money all the time. These are the first companies that will be hit. So again, take a good look at your portfolio and take a look at the balance sheets of the companies which you are holding. If the company doesn't have enough cash reserves to survive for a year, a couple of years, it's maybe a good idea to reduce the size of these companies right now, if not just to sell them overall. By the way, during 2020 and 2021, when I kind of needed to bet on the companies that would rise the most, I bet on small companies which were hit a lot, which have a very strong balance sheet. So I looked at the companies which were reduced in price by about 80-90%, which had cash reserves to kind of keep them in business for the next 2-3 years. Because my bet was that the COVID is going to pass in a year or so, and these companies are going to come back. And at the end, this is pretty much what happened. So again, take a very good look at the companies that you have. Go to Yahoo Finance, go to whatever financial website you like, and look at the balance sheets of the companies that you're holding. One more type of companies which are not going down a lot during the recession is the dividend companies. And for those of you who are investing for the dividends, you kind of already know this, because we have companies which are paying dividends for, let's say, 10 years in a row. They're paying every quarter pretty much the same amount of dividend, or the dividends are rising all the time. The management of these companies, the last thing they want is to stop paying dividends, because that would mean that the stock will just crash. So these companies are doing everything possible to just keep paying these dividends. They will take debt, they will do whatever just to keep them paying. These companies are not really going down a lot during the recessions, because again, the management of the company will do everything they can to just keep the money flowing. These companies usually pretty safe bet to hold during recession periods. So kind of to summarize everything, recession is actually an awesome time to invest, and it's a great time to get great results. The only thing you need to do is just to prepare a little bit yourself, your portfolio, not to panic too much, have a good plan of what are you going to do if something happens. So if your company is going down 80%, if your portfolio is going down 40%, do you have enough cash reserves? Are your portfolio prepared with the proper types of companies? Some of you might ask what to do if kind of overall portfolio is down and you don't really have a lot of cash. And the answer is evaluate your portfolio. Take a look at the stocks and ask yourself, which one are you convinced that are going to come back up, and which one are pretty much wishful thinking because you just kind of hoping that the stock will go up to your kind of buying point and then you will sell everything. So if your only argument is I will sell when I will be break even, sell the stock. Because again, the market doesn't know that you are invested in it. It won't kind of make a deal with you that as soon as the stock hits your price, you will be out and everything will be solved. If your only argument is I will wait for break even because I don't want to take a loss, that's okay, take a loss. All of us had bad experiences, bad investment and losses. This is just a part of an investment. You want to have an example of huge loss, around 35%, for example, we took a week ago. Look at our video of SMCI. We explained pretty clearly how we took a huge loss in a couple of months just because we were not exposed to a lot of the information which was really not public. Take a look at this video. It's really awesome. If you like this video, of course, press the like button. We will be very grateful for that. If you have some suggestions about kind of future topics to talk about, things like dividend stocks or penny stocks or investment strategies, drop a note in this video. This is a young channel and we are kind of open to suggestions and answering to everyone. We will be very glad if you would subscribe to our channel, and we will see you all in the next video. Take care.